Welcome to Explain the Charts, your go-to source for understanding market dynamics. Today, September 24th, 2025, we're turning our attention to the USDJPY currency pair, which is experiencing significant volatility. We'll analyze both the latest news and the detailed chart data to give you a comprehensive understanding. First, let's look at the daily chart for USDJPY to get a broad overview of its performance over the past year and a half. Looking at the daily chart, from May 2024 to early 2025, we can observe a distinct downtrend. The pair retreated significantly from its highs around the 160.00 level in June 2024, experiencing notable drops in late July and early September of that year. This period saw the yen gaining strength against the dollar, likely influenced by shifting market sentiment or specific economic factors at the time. During this phase, critical support was established around the 140 to 142 range, which proved resilient in both September 2024 and April 2025. This sustained move downward defined a medium-term bearish bias for much of this period. Now, let's shift our focus to the more recent period, from mid-April 2025 up to the close of yesterday, September 23, 2025. Here, we can clearly see a reversal in momentum, initiating a new uptrend for USDJPY. The pair has been consistently making higher lows and higher highs, indicating a renewed bullish sentiment. The price briefly surged towards the 150.80 level at the end of July 2025, a strong upward move that aligns with recent news of dollar strength. However, following this peak, the daily candles show a period of consolidation, with the price fluctuating. The last few candles, specifically from September 21st to 23rd, indicate a slight retracement, bringing the price back towards the 147.50 to 147.70 area. This suggests the market was taking a breather before today's reported movements. This recent uptrend and the consolidation we're seeing directly correlate with the news headlines driving USDJPY today, September 24, 2025. Federal Reserve Chair Jerome Powell's cautious tone on future rate cuts, citing persistent inflation risks, has significantly bolstered the US dollar. On the other side, disappointing Japanese manufacturing PMI data and the Bank of Japan's hesitant stance on aggressive rate hikes have continued to weigh heavily on the yen. This clear divergence in central bank policies creates a strong fundamental tailwind for USDJPY, pushing it higher as reported in today's news. Furthermore, strong speculative positioning and carry trade demand above the 145.00 level continue to provide robust support, reinforcing the bullish bias. Let's zoom in further to the 1-hour chart to examine the immediate price action leading up to today's news. From September 4th to September 9th, the chart reveals an initial push higher followed by a significant pullback. Early on September 4th, the pair touched levels near 148.70, but this was quickly followed by a sharp decline over the next day and a half. USDJPY then found solid short-term support around the 146.30 to 147.00 region on September 5th and again on September 9th, forming a temporary floor. This short-term weakness, visible in our 1-hour data, shows the market's fluctuating sentiment just before the latest news-driven surge. It emphasizes that the recent rally to new highs is a fresh development, likely triggered by Powell's remarks on September 24th, which falls outside this specific chart range. For an even more granular perspective, let's turn to the 15-minute chart, covering September 19th through the close of September 23rd, 2025. At the start of this period, we see the price consolidating around the 147.90 level. A notable upward move occurred on September 21st and early September 22nd, pushing the price towards 148.30, an intraday high. However, this momentum was not sustained, and by the close of September 23rd, the price retreated, finishing around 147.599. This rapid intraday movement and subsequent pullback highlight the sensitivity of the pair to market sentiment and news. The news of USDJPY jumping to near 148.30 and 148.78 today, September 24th, suggests a strong breakout above these recent consolidation levels, indicative of fresh buying pressure. This chart shows the immediate lead-up to that significant move, emphasizing the tension at key levels. Based on our comprehensive analysis, immediate strong support for USDJPY lies around the 147.00 to 147.20 zone, which has acted as a bounce point in early September. Below that, the 146.00 and 145.00 levels are crucial long-term supports, backed by consistent defense from buyers and strong speculative positioning. On the resistance side, the 148.50 level is critical. This aligns with highs observed in our daily chart from July 2025 and is frequently cited in current news. A decisive break above 148.50, especially with high volume and sustained momentum, would open the path towards the significant 150.00 psychological barrier. However, traders must be wary around 150.00, as the risk of intervention by Japanese authorities tends to intensify at this level. For the short term, the current news flow, particularly Powell's hawkish remarks, provides a strong bullish catalyst, pushing the pair towards resistance. Conversely, if upcoming U.S. economic data disappoints, or if Japan's Tokyo CPI on Friday surprises to the upside, we could see quick reversals. This interplay of fundamentals and technical levels dictates our trading strategies. Alright, let's recap the important price levels and conditions to watch for USDJPY. Key short-term resistance is at 148.50, a level that needs to be decisively breached for continued upside momentum. Beyond that, the critical psychological level of 150.00 looms, where the threat of intervention could cap rallies. Major support levels are found at 147.00, providing an immediate floor for price action. Further down, stronger long-term foundations exist at 146.00 and 145.00, which have consistently held previous declines. A sustained break above 148.50 is likely, perhaps with a 60 to 70% probability, given the prevailing bullish sentiment from central bank divergence and positive carry trade dynamics. This bullish scenario would be reinforced by strong upcoming U.S. economic data, particularly the durable goods orders and PCE figures. Conversely, a clear rejection from 148.50 or surprisingly weak U.S. economic indicators could send the pair back towards 147.00, with a 40 to 50% likelihood. If Japan's Tokyo CPI on Friday is unexpectedly high, this could significantly strengthen the yen, pushing USDJPY towards 146.00 or even 145.00. Even against broader dollar strength, a scenario we estimate at 30% likelihood. Always keep a close eye on upcoming economic data releases and central bank commentary from both the Fed and the BoJ, as these are the primary drivers. When making trading decisions, consider how the fundamental narrative reinforces or contradicts the technical patterns you observe. That's all for today's in-depth analysis on USDJPY from Explain the Charts. Don't forget to like, subscribe, and hit the notification bell for more timely market insights.